Imagine this for a moment. Priya, she's a seventh grader, maybe in a busy Mumbai suburb, and she hears this amazing new school notebooks, the ones with that fresh paper smell. They're about to become completely tax-free. It sounds like a dream, right? For her, for millions of families, that promise of new beginnings on crisp pages. But what if that free tag, well, what if it actually ends up costing more? Welcome to the deep dive. Today, we're jumping headfirst into a really fascinating twist in India's recent tax reforms. It's a situation where, honestly, really good intentions seem to have run straight into the complex, sometimes messy world of manufacturing and supply chains. Our mission today is to really unpack this unexpected paradox. How could a policy meant to make education more affordable, at least for now, potentially make essential school supplies pricier? We'll look at the specifics, the government announcements, the challenges the manufacturers are facing, and what it all means for students and families across India. Think of it as a journey through taxes, economics, and how, well, seemingly small changes can cause these big, surprising ripples. So let's set the stage a bit. India has this incredible number of students, right? We're talking over 250 million in schools and colleges.
That's right, about 260 million kids in 1.5 million schools. It's a massive scale.
And notebooks. They aren't just paper. They're like the foundational tools for learning, where ideas start.
Absolutely essential. And parents are already spending billions every year on supplies. Budgets are often stretched thin.
And then there's the goods and services tax, the GST, rolled out in 2017. It was meant to simplify things, replace all those old taxes like VAT and excise. So how did that original GST system treat things like notebooks and pencils? What was the cost for families before this latest news?
Yeah, that's a key piece of context. So before this change, under GST, stationery wasn't uniformly treated. Printed books, interestingly, were kept tax-free, seen as a public good. But basic stationery, your pencils, erasers, standard notebooks, they generally fell under a 12% GST slab.
12%, okay.
And sometimes, fancier stuff, maybe geometry boxes or some art supplies, could go up to 18% or even 28%.
So not insignificant for families buying supplies year after year?
Definitely not.
Yeah.
For an average family, it could easily add, say, 50 to 100 rupees extra per child per year. It adds up across millions.
Right. So, okay, fast forward to early September 2025. The GST Council meets, that's the big body, with the Union Finance Minister, state ministers, their 56th meeting on September 3rd. And amidst all the different decisions, there's this one big announcement that really catches everyone's eye. A bunch of educational stationery is moving to zero GST effective September 22nd, 2025.
That was the headline news, yes.
Yeah.
And the specifics were quite broad.
What exactly got included?
Well, notebooks of all types, exercise books, graph books, lab notebooks, all down from 12% GST to zero, nil rated. And it didn't stop there. Pencils, including mechanical ones, erasers, sharpeners, crayons, pastels, even maps and hydrographic charts, they all joined the tax-free list.
Wow, quite a range.
And other things like geometry boxes, compasses, drawing instruments, they saw cuts too, maybe from 18% down to 12% or sometimes lower. The clear aim was to make learning materials cheaper.
And the reaction must have been pretty positive initially.
Oh, absolutely. You can feel the optimism. Stocks of major stationery companies like Dom's and Link jumped some up to 10%. That signals market confidence, right?
Yeah, the market saw it as a boost.
And parents, especially in cities like Delhi, Chennai, were all over social media calculating the savings.
Like that standard notebook example, say, 20 rupees pre-tax. Saving the 12% GST, that's about 2 rupees 40 paise per notebook.
Exactly. Doesn't sound like much on its own, maybe. But multiply that by hundreds of millions of notebooks sold every year.
It becomes a really significant amount nationwide.
For sure. The Indian stationery market is huge, over 10,000 crore rupees annually. That's what, roughly 1.2 billion US dollars. Zero tax looked like it could really cut costs, especially for families in rural areas where incomes are much lower, maybe less than 10,000 rupees a month. It felt like a genuine subsidy for education.
Okay, so far so good. Sounds like a clear win, but this is where the story takes a turn, isn't it?
This is where the plot, as they say, thickens.
Yeah. While the notebook on the shop shelf is now tax-free, what about the stuff used to make it? The paper, the ink, the glue. Did they get the same tax break?
And that's the absolute crux of the problem.
Yeah.
It leads to something called an inverted duty structure.
Inverted duty structure. Okay, unpack that for us.
So here's the catch. The policy did say that paper specifically meant for exercise books, graph books, lab notebooks, that paper also goes to zero GST. Sounds logical, right?
Yeah, matches the final product. Makes sense.
But here's the problem. The broader category of uncoated paper, which is the raw material used for tons of things, not just notebooks, but general printing, packaging, you name it.
Yeah.
That paper category actually saw its GST increase
Increase from what to what?
from 12% up to 18%.
Ah, okay, I think I see where this might be going.
Exactly. Now, picture yourself running a massive paper mill. You're churning out huge rolls of this uncoated paper. How on earth do you track, reliably, whether a specific batch is going to end up as a kid's notebook or as, say, packaging for soap?
It seems almost impossible at that scale.
It's incredibly difficult and risky from an administrative point of view. To avoid potential headaches with GST audits, penalties for misclassification. What do the mills do?
They play it safe?
They play it safe. They charge the higher rate, 18%, on pretty much all of that uncoated paper, regardless of its supposed final use.
Okay, so the notebook manufacturer, the company actually making the notebooks, they go to buy their main raw material, paper,
And they get hit with an 18% GST charge right up front.
even though the paper might be destined for a zero-rated notebook.
Correct. And remember, these notebook makers operate on really, really tight margins. We're talking maybe 5%, sometimes up to 10% if they're lucky.
So that 18% upfront cost is a huge hit. Now, the immediate question that comes to mind is input tax credit, or ITC. Can't they just claim that 18% back?
That's the mechanism that's supposed to prevent this kind of problem in a GST system. ITC allows a business to subtract the tax they paid on their inputs from the tax they collect on their outputs. It avoids double taxation.
Right, standard procedure in GST.
But here's the crucial missing piece. When your final product, in this case, the notebook is zero rated for GST.
You're not collecting any tax on the output.
Precisely. And if you don't collect any output tax, there's nothing to claim your input tax credit against.
So that 18% they paid on the paper?
It just becomes a stuck cost. It
Right.
gets baked directly into their cost of production. They can't recover it through the ITC mechanism.
Wow. And it's probably not just the paper, is it?
No, absolutely not. Think about the other things needed. Glue, that's often taxed at 18%. Ink, also 18%. Lamination film for covers, maybe 12 or 18%. Even services like freight, transportation, the printing labor itself, those services usually attract 18% GST.
So all these input costs, which still carry GST, suddenly can't be offset.
Correct. And the net effect, according to industry estimates, is that the actual cost of manufacturing a notebook could jump by, say, 10 to 15%.
15%, that completely wipes out any intended benefit from the zero rating.
It does more than wipe it out, potentially. And this hits the small guys hardest.
Tell us about the structure of the industry.
India's notebook sector isn't dominated by a few giants. It's largely made up of small and medium enterprises, SMEs. We're talking over 5,000 units spread across the country. Maharashtra, Tamil Nadu, Uttar Pradesh, West Bengal are big hubs. These are often family-run businesses, perhaps clustered in places like Sivakasi or Mathura. They employ hundreds of thousands of people directly, millions indirectly.
And these SMEs, they just don't have the capacity to absorb a 10-15% cost increase, do they?
Not sustainably. Their margins are already wafer thin. Someone involved in the industry described it quite vividly. Something like, it's like building a house with gold bricks but having to sell it for free.
That paints a picture, so what's the likely outcome then?
Well, to stay in business, many manufacturers are saying they have no choice but to increase the maximum retail price, the MRP, printed on the notebook. The talk is about hikes of around 8 to 12%.
So back to Priya's 20 rupee notebook, the 12% GST saving was supposed to make it cheaper, maybe around 17.60 rupees theoretically without tax.
Right. But if the manufacturer has to hike the base price by, say, 10% to cover their unrecovered input taxes, that 20 rupee base price becomes 22 rupees.
And then it's zero rated, so it sells for 22 rupees,
Right.
more expensive than before the tax cut.
Exactly. The intended saving is gone, and it actually costs the consumer more. That's the paradox.
And this isn't just a theoretical worry, is it? Are we seeing manufacturers actually reacting?
We are. It's happening now. There was a significant meeting held in New Delhi just recently, around September 11th. It brought together manufacturers, specifically from the Exercise Book Manufacturers Association, with GST officials.
What came out of that?
The manufacturers basically laid out the math. They showed how the paper cost alone went up due to that slab change from 12% to 18% on uncoated paper, how they have no ITC relief, the compliance burdens. Officials reportedly acknowledged the intent of the policy making education affordable, but the immediate focus seemed to be just implementing the zero rate on the final product first.
So no quick fix offered.
Apparently not in that meeting. We've heard from producers, like one based in Mumbai, who said something like, "We've raised this issue, it's about survival for us, but the priority seems to be rolling it out rather than solving the problem first."
Frustration must be high.
Definitely. You see it online too. Manufacturers posting things like, "Zero tax on notebooks has effectively increased prices," and pointing fingers at the paper mills having to charge 18%. It's a real crisis for many of them.
And there's another layer to this, isn't there? Something about imports.
Yes, that adds another serious challenge. Under various free trade agreements, particularly with ASEAN countries, think Vietnam, Indonesian notebooks can often be imported into India completely duty-free.
And because they're for education, they'd likely benefit from the zero rating here too.
Potentially, yes. Or they might have beneficial tax treatment anyway. The point is, domestic manufacturers are suddenly facing higher input costs because of this inverted duty structure.
While imported notebooks might not face the same burden.
Exactly. It creates a really uneven playing field. Domestic makers, especially the SMEs, just can't compete if their costs are artificially inflated while imports come in cheaper.
What could that lead to?
Well, the fear is a flood of cheap imported notebooks hitting the market. This could severely damage Indian SMEs, potentially leading to job losses. This sector supports, indirectly, maybe over 2 million jobs. We actually saw something similar back in 2023 with a surge in paper imports that caused problems for Indian paper mills.
So this situation could undermine initiatives like Make in India.
It certainly risks it. If you want to encourage domestic manufacturing, you can't have a tax structure that inadvertently penalizes local producers compared to imports.
Let's bring this back to the students, to Priya. What are the real-world stakes here? India has, as you said, this huge student population.
260 million kids in 1.5 million schools. It's the largest school system in the world.
And for many families, especially outside the big cities, budgets are tight. Think about states like Bihar or Uttar Pradesh, where average incomes are much lower, maybe around 50,000 rupees a year.
For those families, even a 10% price hike on something as basic as notebooks is a real hit. It's not trivial.
What does that mean practically?
It could mean families simply buy fewer notebooks. Maybe siblings have to share more. Maybe kids try to make do, cramming notes into less space. It could affect their ability to focus, to learn effectively, if they don't have the basic tools.
Is there any history of this kind of cost-affecting education?
There is, actually. Some studies done before GSE was implemented suggested that the cumulative burden of various taxes on school supplies could contribute to dropout rates, particularly in low-income areas, maybe around 5–7% in some cases, attributed partly to these hidden costs.
So if this reform backfires and prices go up,
It could inadvertently worsen things. It might even widen the gap between, say, urban students who might have easier access to digital alternatives and rural students who rely much more heavily on traditional paper notebooks.
it's a stark reminder of how these economic policies play out on the ground. So the big question then is, what can be done? Are there solutions being discussed?
There are. Tax experts are looking closely at the classification codes, the HSN codes. HSN 4820 is for notebooks. 48.2 is for the general paper category. That difference seems to be creating this gray area.
The ambiguity that makes mills charge the higher rate.
Exactly. And analysts from a major consultancy put it quite well, saying something like, mills can't track end use reliably, so they fear disputes.
Yeah.
We need a clear way for them to supply paper at a nil rate for notebooks without that fear.
Has this kind of GST glitch happened before?
Oh, yes. The initial GST rollout in 2017 had similar issues with inverted duty structures and blocked ITC in other sectors like textiles and food processing. It often takes time, sometimes years, to iron these things out.
So what are the proposed fixes this time?
A couple of main ideas are floating around. One is creating some kind of dedicated certification system proof that specific paper purchases are genuinely intended only for making these zero-rated notebooks. That might give mills the confidence to apply the no rate. Another approach is to allow manufacturers to claim refunds for the GST paid on their inputs, even though the final product is zero-rated, basically unblocking that ITC specifically for educational items.
Is there any precedent for allowing refunds like that?
Interestingly, yes. In the very same GST Council meeting where this zero rating was announced, they also approved provisional refunds for exporters dealing with zero-rated supplies. They're allowing them to get 90% of their refunds up front from November 1st, 2025.
So the mechanism exists, in a way.
The question being asked is, why not extend a similar principle here? Provide some kind of refund mechanism to offset those input costs for notebook makers, fulfilling the original policy intent.
It really shows how one policy change can have these unforeseen consequences throughout the whole system.
It's a classic example of policy ripples. And it's not just notebooks, potentially. While textbooks are already nil rated, if publishers face generally higher paper costs because of this 18% slab,
Their costs could edge up too, indirectly.
it's possible. And you still have things like private coaching classes, a huge part of the educational landscape in India, taxed at 18%. That stands in stark contrast to tax-free school fees. It highlights the complexities of taxing education-related goods and services.
But let's flip it for a second. If they do manage to fix this ITC issue and prices genuinely drop as intended, what's the potential upside?
The upside could be significant. If notebooks and other supplies become truly cheaper, the market could see real growth, maybe 15–20% post-reform. That could encourage innovation too, maybe more manufacturers exploring eco-friendly recycled paper notebooks, for example. Cheaper pencils could mean more drawing in art class. Readily available maps could genuinely help geography lessons. The positive potential is definitely there.
So we're kind of in this waiting game right now, aren't we? September 22nd is the effective date for the zero rating.
Exactly. The air is thick with anticipation and maybe some anxiety. Will manufacturers try to absorb the costs initially, hoping for a fix or banking on higher volumes?
Or will we start seeing those MRPs creep up on shop shelves, turning the initial celebration into, well, confusion and caution?
Recent surveys suggest most parents, maybe 70%, are still expecting savings. But the industry mood, as we've discussed, is much more uncertain, much more mixed.
It really feels like a quick, clear clarification from the GST Council is needed.
Urgently, yes. To ensure that the whole point of this reform, making education more affordable for everyone, doesn't get lost in the technicalities of tax collection and credits. It needs to work on the ground, not just on paper.
So we've really journeyed through this intriguing case, haven't we? A tax break designed for relief reveals this unexpected economic puzzle. This deep dive shows how even policies with the very best intentions, when they interact with complex supply chains and these detailed tax rules like input tax credit, well, they can create these unforeseen pressure points.
Yeah, and the key insight isn't just that policies have side effects, we know that. It's how a mechanism designed for fairness, the ITC, can ironically create a new burden when the final product becomes zero-rated. Good intentions hitting a practical snag.
It really is a reminder that policy can be like a complex machine. The design might look perfect, but one tiny point of friction can cause the whole thing to seize up. For Priya and for millions of students like her across India, the real test isn't just going to be the price at the shop counter. It's about how their learning, their ability to get the tools they need, is ultimately supported or maybe hindered by these intricate economic forces. And it leaves you wondering, doesn't it? What other well-intentioned policies out there might have these hidden complexities, just waiting under the surface, shaping our daily lives in ways we don't immediately see, one ruled line at a time?